Hey, good morning, everybody. Mark and Brenda here at Bitcoin.
Bitcoin say what?
Boom. Boom, boom. Hey, everybody. Happy Thursday morning. Hopefully you're up and at 'em here at 6:15 Central Standard Time here in the great US of A. And it's been last couple days have been a little bit, middle of the ninth round, and you get knocked around a little bit. So, Brenda, you can maybe start off and start
Well,
off.
go ahead. Why don't you share one of your news articles, and I'll talk about the picture behind you again. I still left the Niagara. Go ahead and share one of your photos.
Oh, okay. I
And
thought
the photos were-
off this.
No, you can go ahead. I'll give you the floor. Share you the Niagara Falls behind Mark. We kept that on there because we are still going into the chartered unknown of a tsunami of Niagara Falls there. And so let's talk about the news about where Bitcoin went yesterday. Of course, everybody who's probably watching our stream knows a little bit about Bitcoin and that how it crashed yesterday quite hard down to, I think, 29.6, and then it immediately popped back up. So what say you, Mark?
Okay, very good. I'm going to start off my.
You're not sharing it. It's not shared.
What?
It's not shared.
Are you serious?
Yep.
Okay. Let me.
So just get back out, click on the streamer at the top.
Hold on. It didn't come through. What
Okay, now just do it again. Just hit share.
Oh, I did exactly what I've done the last couple times. Maybe I missed. Oh, I know what I did. Hold on. That's what I didn't do. Is it now?
Nope.
I did exactly what. Okay, so I'm just going to read the article.
Let me see if I can share it. Hang on. Nope, I can't because you're controlling it. Here we go. Let's see if I can do it. There we go.
Oh, okay. I wonder what the heck happened there.
I don't know.
See, it wasn't me. And I've been.
I'm messing with you today. I'm not. I'm really not. But
okay, Wells Fargo gets into crypto with upcoming professionally managed cryptocurrency investment. This is from Bitcoin.com. All right, Daryl Cronk. That's a cool name. Daryl Cronk, the president of Wells Fargo Investment Institute, a registered investment and I think I tried to smush two words together there. Investment advisor and wholly owned subsidiary of Wells Fargo Bank, revealed his team's crypto plans to the Insider in an interview published on Wednesday. He said that his firm is in the final stages of adding an actively managed cryptocurrency investment strategy to its platform for qualified clients.
What does that mean?
Are you qualified? The crypto research and due diligence effort are being led by Greg Maddox, head of Global Manager Research, a division of Wells Fargo Investment Institute, emphasizing that the firm has been searching for a professionally managed solution for months. Cronk expects the strategy to be added to the platform around mid-June. So I'm not going to go any deeper into that article. That's on Bitcoin.com. So this is just going back to saying, here's what I think is I'm gonna make a quick assessment. I think what happens is the average, I don't know everybody around the world, but the average American looks at all this and says, okay, the Bitcoin went down, it's horrible, and people are pumping it up and dumping it and all this stuff. I think the average American just wants to be dealt with honestly, and this is kind of like people can't like in banks and stuff, they can't show their hand. So it's like playing poker. Okay, you don't really show your hand. Sometimes you show your hand, sometimes you don't. And when you're playing in this kind of this is really big league world, you have to understand that you'll find entities like such as this talking out of both sides of their mouth because they had kind of bad-mouthed cryptocurrency not that long ago, and now all of a sudden, poof, out of nowhere, they have a strategy and a team put together to offer cryptocurrencies.
Right.
So
which probably takes 6 months. or
6
longer.
months. Oh, it's longer than that. I
Yeah.
guarantee you.
Yeah.
You got to remember, this isn't a small company. This is
Right.
one of the largest companies in the world, and to
Right.
work through all those channels, it takes time.
Right. They
So
get it all set up and have support staff for all those people and all that. Yeah.
always remember, look, they're again like playing poker. Sometimes there's double dealing, and that's kind of what's going on. I believe in this marketplace is that you got people, they want to buy cheap for their clients. I can kind of understand it, so don't take them always at face value. All right.
Well, here's a sister article that says Wells Fargo U.S. Bank is set to offer crypto funds to rich clients. So I knew you were giving that article, and then I thought this was interesting. And there actually was quite a few articles today being flooded into the news cycle about Wells Fargo, and most of them mentioned about to the wealthy clients. So I find it interesting. I'm not going to read the whole article because it was very similar to yours, but it does say that it's going to offer it to their wealthy clients. So I don't know why, it just has to be the wealthy that get the first stab at this or what, but just found that interesting. And that's probably what your article meant when it said to qualified customers. So who knows, what that is about, but maybe there's some sort of regulatory thing in place that we're unaware of that, they have to do that with people who have so much assets that they can, lose. I don't know. And the average guy, they can't do that for, but are you there?
Yeah. Yeah.
Oh, okay.
I didn't know if you were handing it off or you're taking. Why don't you take another start? There we go.
Yeah.
You took it full advantage of that.
So yesterday, in the beginning of the day or through the night before yesterday morning started out here in the U.S., it was out not only that, possibly Musk's negative comments about Bitcoin caused it to crash, along with and coupled with that China was banning crypto. And the news articles were being said, oh, China's banning it. And it's like, no, China did not just ban crypto. Again, here's what really happened. Reports that China had enacted a crypto ban appeared to be somewhat wide of the mark, despite a joint statement from 3 leading financial bodies underlying the fact that the companies in the nations are barred from offering crypto-related services to their clients. But the headline writers of most of the Chinese media outlets mentioned above noted that the statements were made in a bid to prevent the risk of crypto trading speculation, dampen the hype. The central bank used never similar wording to preface its own post. Reuters, however, also reported on the issue, but appeared to have understood that a fresh ban had been put in place. This does not appear to be the case at all, as many China writers and Chinese-speaking crypto enthusiasts were keen to point out. So this gentleman said 3 dumb things happened within the hour. Reuters writing a misleading article on China banning, people retweeting Reuters and believing it, and the market dumped on the Reuters news. China did not ban crypto. It's reiterating the anti-speculation law from years ago. Found that interesting that this FUD that I love to talk about was put out there again. And who knows if that was, let's just say, put out there coupled with a bunch of other FUD news to see if it could loosen hands. And then once you have a trickle down of the Niagara Falls of news, then there's a Niagara Falls of the market. So,
yeah. Well, you know what? There again, I try to keep life simple. So I ask who, what, when, where, and why. So the bottom line is, you have these large organizations, institutions, whatever you want to call them, whales, that are pushing it down. There's many. I believe there's many things coming at this, and they're suppressing the price, and they're buying lower. That's the name of the game. I get it. And I think the average person has a hard time dealing with it because I don't think, in our day-to-day lives, it's kind of like, hey, we're going to do whatever it takes to get this price down as low as it just. I just don't think in our society today that's really kind of thought of. It's kind of a rough and tumble kind of approach. So I think moving forward I think that understanding that what goes on here is stuff that you have to understand. This is what goes on. It would be nice just to say, okay, no, everybody's honest. What they say in the newspaper is really what happens. Newspaper. My gosh, am I dating myself? Who even reads newspapers anymore?
my parents. My
So,
parents do.
well, but I guess my point is that when you read the headlines, they're very salacious, and all of a sudden you're thinking, oh my gosh, China's banning crypto. read a few paragraphs in. No, it's not. The article is misleading. It doesn't tell you the whole story. They want to sell more viewership or newspapers or whatever. So I just want everybody to understand. I think in this rough and tumble world, this has been going on in the stock market. This happens in a lot of marketplaces. So just don't kid yourself. That's one of my rules. All right, I'm going to give you. This is just a chart I'm going to show. So
okay. So if it doesn't share, I'll let you know, and then I'll share it at my end.
All right, let me share it here. Does that show up?
Nope, but I'll add it to the stream for you. There you go, hon.
Oh.
I actually saw this yesterday. I love this. This is a great visual.
Great chart. This really breaks it down nicely from 2012 all the way up to current. So this is kind of where the dips have happened here. Okay, so let's look at
mean, we can actually go way. It hasn't been this bad. Holy cow. Could you imagine that we had an 86% correction? Holy cow.
Yeah, it was 86.9%. Man, I would not have want to been around for that one. That one is, if you were in prior to that and you're still here.
Yeah, but just think about how much Bitcoin was back then. And so even if you had, 10 Bitcoin, you're like, okay, I might have lost 10 grand.
Yeah,
and now people are buying.
Yeah, but that's hindsight, because you could have taken, so look at it this way. Okay, it went from $11.63 down to $152. You could have taken a much larger position. Do you know what I mean?
True.
And then cratered. So you're looking at it in hindsight, because you say, well, it's 64 went to 31. So this isn't even in the top 5. Okay, so 51%. And hey, we still could be moving downward. Who knows? But to be honest with you, it still isn't in the top 5.
Right.
Those are some rough numbers there.
Yeah, maybe we need to actually print that out and we can frame it and keep it in like our family room, so that when there's the next big correction, we can just reflect on and say, okay, this isn't too bad.
And then we can sit back with our martinis and our cigars and laugh like, ha ha ha. Like the evil villains, and we rub our hands together and twirl our mustaches.
Hey, I don't have a mustache. I take care of that every week.
My mustache.
Women don't reveal their their little things that we do. All right, let me go share mine.
Hold on, Brenda. I clicked. Hold on, maybe
I already got rid of it for you.
Oh, okay. I clicked StreamYards and it wasn't letting me out. I was trapped in hell there.
Okay. 3 good reasons why 30K is probably the bottom for Bitcoin. Regulatory concerns, a bit of FUD, and uncertainty surrounding Tether appear to have exaggerated the Bitcoin price sell-off, but derivatives data suggests that the bottom is likely in. After agonizing 35% loss in the past 24 hours, Bitcoin finally bounced at 30K early today, May 19th, a trading session. A total of 3.4 billion and liquidation took place, which might have accelerated the movement, but they can't really be entirely blamed for the move. Multiple things have happened. Pinpointing the exact culprit for the price movement is a daunting task, although Elon Musk's remarks on Bitcoin mining coal usage likely played a little bit of the role. However, May 19th marked the deadline for the Tether Holdings limited breakdown of Tether, the USDT, reserves to the Office of the New York Attorney General. Caitlin Long of Avante Financial stated that traders might have felt compelled to sell other cryptos to reduce their total risk exposure given the credit risks that emerged from the Tether reserves. I think that was all I wanted to share on that. And so yet again, we have some speculation as to why it dropped so much. And so, who knows? I don't think any of us will ever know, but to know that there are a lot of things that are in play, and to couple onto that, I'm going to show you just something real quick.
But Brenda, like we've said before, okay, so whoever's out there and whoever's listening, this is a very transparent market. You can go on blockchain.com. Is it blockchain.com? And you can start to see, I mean, there are a lot of areas you can kind of see. I'm not sure of all the websites and stuff. Maybe we can put a list together for the folks. But to be honest with you, you can see what's going on in actual real time. So that's a beautiful thing. This is a very transparent, you may not know exactly who is, but you can see what.
Yeah, I think the people that have the subscriptions to the on-chain to glass nodes, the one that costs like, $7,000 a month or something like that. I think the people in the institutional ones or that work for big corporations that are into the financial world, I believe they can actually see wallets that are moving. So so we have to wait for them because most of us can't afford that. So yeah, totally. So this article kind of bounces off of the last one, and it talks about how, before, Elon Musk and, coal is making Bitcoin dirty. And then he tweets yesterday, I don't know, to stay relevant or to look like he was clean in all this and he's not the bad guy. Elon Musk says Tesla has diamond hands amid Bitcoin and crypto market meltdown. To the average person who's listening to us who is new to Bitcoin or crypto, diamond hands means that you're holding no matter what to the very end. And so he says, Tesla has diamond hands. Musklas. Elon Musk crypto escapades continue, with the tech entrepreneur now suggesting Tesla had no plans to sell its Bitcoin. A week ago, I almost said Muskla. Musk released a statement declaring Tesla. That's where I'm getting it from. I'm merging the two, Musk and Tesla.
Muskla. Maybe it's a new company he should start. Muskla.
Will no longer accept Bitcoin for purchases until the top crypto is more energy efficient. The move raised questions on whether Tesla is selling its massive Bitcoin holdings, which were worth 1.5 billion. And then here's his tweet here. Tesla has diamond hands. Thank you so much for staying in the news.
Okay, hold on.
Muskla.
Mr. Muskla. Okay, so
Muskla. Let's call him that from now on.
I'm going to call him out.
Mm-hmm.
Call him out. Okay. Now hear me out. Follow my thesis here.
Okay.
He's obviously throwing Bitcoin under the bus because of coal. But he's got diamond hands. What's diamonds made out of? Mm-hmm. And diamonds are more refined. And it had to take something out of the ground. He's diamond hands, and see, you guys got to trust me. I keep telling you got to watch these people. They talk out of both sides of their mouths. Oh, yeah, coal's horrible. But now all of a sudden he's diamond hands. Yeah, we need to have a talk, my friend.
Right. Maybe he needs a different choice of words when he tweets.
Yeah. You might want to get some sort of other, maybe hard material.
Well, a different emoji too.
Yeah, maybe something that doesn't necessarily need to be mined out of the ground.
Right.
To have hands. So maybe it could be like a granite, because granite kind of bubbles up to the earth. You can find granite in, say, northern Wisconsin or New Hampshire. Maybe it could be granite hands. And you go chip a little off and show, ooh, I'm a granite hand.
Right, let's start the trend. We'll do it today. All right. You want to share one of your articles?
I'm sorry. People sometimes rub me the wrong way, and when they talk out of both sides of their mouths, just give it to me straight. Oh, well, that's how I am. I'm not changing.
He wants to be relevant, so he's got to he's got to bring up the stock price of Tesla because it dropped a little bit.
Yeah, well.
All right, go share it, and then I'll add it to the
screen. Here we go. I'm going to share my screen. Hopefully I share it this time for some reason again. Let's see. Okay, here we go. This is another shorty. It's really not even an article, but I always like to share. Okay.
Go ahead.
You got it?
Yeah.
Okay. It's not the video I'm looking at. It's the tweet Michael Saylor sent, and I just really appreciate it. Entities I control have now acquired 111,000 Bitcoin and have not sold a single Satoshi. Bitcoin forever. That's forever, Lauren. Forever. So if you get that.
Very nice. Although I do like the video below that actually kind of fun to watch. But
do you want to play it?
I can't because it's not at my end. I'm just sharing it. So don't worry about it.
I won't play it because if I can't, then I don't know how to shut it off. And there again, folks, I'm straightforward with you. I'm not the technology guy of the family here.
All right, I'm going to actually share something interesting. It's a video that we have here, and this was from Ivan on Tech shared this. We're going to share part of it, and he is interviewing a gentleman who talks about what probably was the manipulation yesterday and who or what whales, or that there are whales at place, and that there's a specific manipulation. I think it's called, is it Wyckoff's? Wyckoff. That this is actually, the gentleman lived like in the late 1800s to the early 1900s, and literally this chart here that he has, that literally it played out exactly this type of manipulation. So we're going to listen to part of it.
Playbook. So The playbook.
So again, this is the playbook that this guy wrote about, and he says this is very common for the manipulators of the markets to do. And so I'm assuming that meant the stock market, and now it's being in play here. So he drew it out, and literally it's playing out.
So times change, but people don't.
Yeah. So Mark, when I restart this, let me know if it's not playing at your end, okay? Because I stopped it, and I don't know if it's going to. So.
No, it's not playing.
Is it?
There it is.
Okay, so let me restart it. It's so sensitive. Honest to
Are you talking about me?
Okay. No, honey, I love you.
On a big scale, is that you accumulate somewhere. That's another pattern then. You accumulate as cheap as you can, as much as possible. Then you pump the price up. You buy in a different way. You don't try to buy carefully anymore. Do not move the price. You do the opposite. You try to buy it heavy to drive up the price as high end, as fast as possible. And then when you gotten the price up, you start offloading your Bitcoin bags. And that's then called the distribution. And then there are these tricks that you can do.
He's talking about the manipulators.
That there is as many people as possible buying your bags before you then start driving it in the other direction. So let's is it
and just interrupt, Anders. So basically, this is all about how a big whale, somebody with money, can make profits on the way up by creating a kind of mania, and then selling as much as possible, but still giving people the hope that it will continue.
Yeah.
Before then shorting it on the way down.
Yes.
When he knows that all of this pumped up price was created by him or themselves, so they can both pump it up, make money on the way up, unload, and then also short the hell out of it at the end. So this is the thing we're looking at.
Exactly, and then do it all over again. So it's this guy, Wyckoff, 1873, 1934, that we're looking at, and we're looking at his drawings of distribution. So if you just look at this picture a little bit, how it looks, and then we switch back to the Bitcoin chart, you see that I've drawn this exactly. So through these steps a little bit, and I think you can kind of recognize and remember what happened on these dates. First, we have this huge run-up, right, from 10th.
Okay, so we can stop that for now. I'm actually going to share it again in a little bit. Find it very interesting that played out like almost to a T.
Almost to a T. And you know what's more interesting? I know that this, if I heard it correctly, he said that guy was alive from 1873 to 1974?
No, 1934.
Oh, I thought you said 74. I'm thinking,
no.
Gosh, if that guy lived 100 years, he saw, think of all the stuff he saw in his life. You know?
No, but just imagine if he did and what else he could have wrote about.
Oh my gosh.
He was obviously brilliant, you know.
So obviously this is there again. Times change, but people are, this has been going on since the beginning of probably man. So
and us little retail investors and us little guys, we're just an ant out of all of that trading.
Yeah,
realize.
Yeah, but here's
a lesson to learn kind of from it is just to realize to not be completely at risk because they are manipulating this. And if you know they're manipulating it, then, you know, for us, possibly on some of our investments and not financial advice, to be a little bit more diamond hands with it because, you know, they are manipulating it, but eventually the goal is to drive it back up over time. They might short it and drop it down so they can make money on the short, but the goal is to bring it up because they don't want to lose their money in an asset either. So
I think this really gets down to mass adoption, because if you think about this, okay, if let's say we go to we're 150 million people, I think, or allegedly that are kind of in the crypto sphere or in Bitcoin, roughly. So let's say that goes to 1 billion people and everybody's just buying a little bit, and it takes away the power from the power centers that are out there, the whales. You know, it's not as inviting to them if we're talking about changing the monetary system here. So I think it has to be people that are going to come in, that are going to have some conviction and say, this is, you know, if it's a small stake, great. Put your stick in the ground, come back in 10 years and check it out. But my point is that it really gets down to mass adoption, because you ask yourself, why are these people buying this? It's not just because they're making money, because they're making money now. but they see that they're really going to make money down the road.
Sure. And if they offer, and if you just start look at it from an institutional aspect, these institutions coming in are allowing only the wealthy, as we shared an article earlier, and we've shared articles in the past couple of weeks on that. So they have their wealthiest people are their investors. So now we're on an institution basis like Wells Fargo or the like. And so now we have them manipulating the market through that as well. And so, you know, it scares enough of the retail people that they don't want to be part of the manipulation. So they're like, you know what, I'm just going to stay with the stock market, or I'm just going to go buy silver, or I'm just going to buy something, because they just don't want to be at risk because it's scary for them. So
yeah, it's a little nerve wracking. I get it. I mean, all right, I'm going to share my next.
Oh, hang on. I wasn't done with the video. I want to share a little bit more.
Okay.
Yeah. Hang on a second, and then we can move on.
This pump in order to create the excitement.
Exactly. So they've helped it along all this way from when it started, basically at maybe 10K, somewhere around here where it really started, even before that, maybe 8, 9, 10K. Right. And then we're up in the distribution pattern. So this whole pattern is a distribution. It is like to offload, to sell. And then there is this trick to do it in the way that there are actually buyers, because if they would start to sell all at once, a price would go down, right? And people would panic and there would be no buyers. They're trying to get people to buy here. They're trying to get people to buy as high price as possible. So here's the buying climax. There's the automatic reaction. Then there's a secondary test. They test the waters again. Test the water, see how much supply is it, how much can they sell. And if you look on the right side here, you can see selling volumes. You can see that here happens a lot of selling volume at this point. And then comes the next surprising thing, because here we have been euphoric, and then something surprising happens. Because here they put in a support, and then comes a drop below that support. SOW stands for a sign of weakness. So suddenly there's a weakness in the market. The previous support didn't hold, and everyone starts thinking, what's going on here? Maybe this was the top. Maybe we should sell here. And people start selling and shorting and covering their positions again. Here it's sign of weakness. And then what do? They drive it up again. So
obviously, I'll share. I actually did share in the show notes the video for Ivan's video that he shared yesterday. Watch the whole thing, so you can actually see where he talks about the distribution phase, and that's to get us to buy more and then to panic and sell off various people, and then that's that whole phase. And then they finally did what they did yesterday, and they dumped it. And I'm also in a Discord trading. Private trading one that you and I belong to, and I went in there yesterday to listen to because there's a bunch of day traders in there, and they were all talking about this. So this isn't just something that Ivan on Tech shared and this guy, and it's just a theory. All the day traders were talking about this manipulation strategy, and they believe that's what happened. And so this is not just something that a couple of guys are tinfoil hatting. The day traders are all talking about this as well. So watch the whole video. And then Ivan mentions at the end of the video 2 or 3 people to follow. And then those gentlemen talk about a couple other people that they have followed. And they'll start educating you to know what's happening in it, so that at least either you don't put too much at risk, or you know that it will come back, and to not panic and to know this is going on. So go ahead. I'm sorry if you want to.
You know, as somebody who's coached football, you have to go into your game with a game plan. Okay. And what is your game plan? You know, as we're talking, you know, the everyday person that we're running into knows there's obviously problems. So if you decide that you want to step into this marketplace, you're ready to say, hey, I'm gonna go buy some Bitcoin. What is your game plan? You know, you have to decide. The one thing that I've learned about Bitcoin is really you are in full control. Now, you may not like that, and there's obviously going to be ETFs and all this other stuff down the road. But if you want more control over your life and really start to understand that this sort of stuff goes on, because it does, folks. I hate to be the bearer of bad news, you know.
Well, here's the thing. When you said you're in control, so here's yesterday. If you're watching it on our stream or on the replay, a lot of people yesterday wanted to go and sell off. And most of the exchanges like Coinbase, Kraken, Gemini, they were all down. Nobody could get in and access their crypto. They were overloaded, or they just, who knows? I'm not going to be, you know, hey, you know what?
Well, they couldn't. You couldn't get in. Kind of like Robin Hood kind of thing.
Yeah, it's all of that. Yeah, and almost all of them were down. And so we're also in a crypto group, and a lot of people were saying, make sure you have plenty of accounts open up. So that way, if something happens, you do have access to either some of your money to buy in. A lot of people wanted to not necessarily sell yesterday. They wanted to buy in when it was low, and they couldn't. So were they keeping people from selling? Maybe, maybe not. Or were they keeping people from buying on the dip? Because the whole goal of this video that we showed, and like I said, in this day trading group that we belong to on Discord, and they are all saying this Wyckoff manipulation method that's been around for over 100 years was in play. That the whole goal of that was so that these big whales or these institutions or whoever's behind this, potentially behind this, was buying on the dip, and they didn't want the average guy to buy it. So, all right. So you want to go ahead and share whatever else you have, because we're on 30 minutes. I got one more to share after yours. So let's see who else. And welcome to the show, guys. We got a couple people viewing us here. So thank you for coming and watching us. Go ahead, Mark.
All right. Did it come up?
Yep.
Okay, fantastic. Oh, Bitcoin whales feast as Bitcoin. I'm sorry, something about that sounds funny. Okay, Bitcoin whales feast as Bitcoin price and the wider market meltdown. Panic selling. Oh my gosh, panic selling. Bitcoin's priced to 30,000. Here we go.
Oh, it was scary yesterday. People are like, "Holy!"
I know. You know what it is. You know what it is. It's what
if you're new to it.
Okay,
and we're still actually pretty new to this.
Sometimes because we get wrapped up in our own world. Okay. Let me read the article. We'll move forward. Data from Cointelegraph Markets and TradingView shows that the initial price pump that pushed Bitcoin below the $43,000 support level on May 18th accelerated into overnight trading sessions as $110 billion worth of trading volume fueled the wick down to 30,000. Take a look at that chart.
Yep.
That's ugly. It's ugly if you're at the top and now it's cratering down. But if you're the guy that's looking to just get in, wow, nice buying opportunity and a rebuy to the upside here.
Yeah, and to interject there, like both of our older sons want to buy in a little bit, just a couple hundred, maybe a couple thousand. And I've been telling them for 2 weeks now, get on an exchange, get your KYC done. That means know your customer, that you have to put in some information so they can verify, because that's what our government requires for these exchanges. I'm like, get on an exchange, get some money moved over. I think there's going to be a little bit of a correction, or be great opportunity. And they didn't have that done, and so they missed it. I'm not saying it's not going to happen again, but exactly there, like you were saying, it's great when you're at the bottom. And so it's one of those things that sometimes having your exchange set up, and maybe even just a couple hundred sitting in there.
Yeah. You have to be forward looking, especially in crypto. You have to be forward looking because
it happens so fast. Because when it hit that bottom 29 something, and then it popped right back up. Okay,
so as this was falling down yesterday, you and I had a discussion during the middle of the day, towards the end of the workday for me, and I said, this is kind of wild, because think about it. There are crypto people on the other side of the world that are just waking up and are like, what? Bitcoin say what? And it's not that it's our show, but they're like, holy cow, it dropped off the table. Let me finish the article and then we'll get out of here. The market downturn sparked outages and other delays across a few of the top cryptocurrency exchanges, and the prices of vast majority of altcoins cratered alongside the price of Bitcoin, with Ether briefly plunging to $1,900 and Dogecoin bottoming out at 23 cents. Ooh, Dogecoin, not good.
Interesting.
So bottom line is this: in at the very end of that article, Bitcoin runs the show and everybody else follows. And there again, so when you've got now, people don't understand. You have a lot of volume, people trying to sell, but you have just as many people trying to buy. Why did that price went from, it started yesterday at 40, 39, and went down to 30, bounced off of 30 and went back up to 39. So what does that tell you? That tells you that there are people that are on ramping as quickly as they're offloading, and then they're finding that spot price that makes them happy, and they can get in and they're moving the market back up. The first thing I'm going to tell people is if you don't like volatility, this may not be the place for you.
But also earlier, watch the video that we shared for Ivan on Tech yesterday, talking about the Wyckoff distribution model that was, and the day traders that I talked about that we belong to in Discord, a private group of these day traders, and they were all talking about it. I shared the link in the show notes. Go watch the whole video. And I don't think we're at the end of this Wyckoff distribution model.
We may not.
No, I'm saying I saw there's a couple of things, and I don't know if we're at the bottom of it.
Well, here's the thing.
Let me interject. And those day traders were saying the same thing.
Well, okay, so let's think about this real quick. You're showing me a chart from 1934, whatever year it was. That chart was his modeling. Okay, so if you stop and think about this is less about Bitcoin. This is more about markets being manipulated. Is it
right?
Not?
It's the methods that they use. And they understand it. And I actually think it's also, it's not just that they know how to manipulate markets. It's the psychological methods that they use to manipulate markets. Actually, I'm going to not share this. We can talk about this tomorrow, because actually this brought me to another thing that I wanted to say.
Okay.
We were talking about this before we brought in the show. The psychological things they do to manipulate the markets. I watched I think Squawk Box yesterday, and there was an interview with a gentleman, and I think this is really relevant. And the gentleman said, they can throw out a tweet or throw out a message, and then the millennials who are really big into crypto get so emotional because of, let's say, a Muskla. I like to call Muskla now instead of Musk and Tesla, Muskla. And they get emotional about it. And so then they dump their bags because they're like, well, we're fanboys of him. And if he says it's not good, then we're with Elon. And then the gentleman said, well, how is it any different than the boomers? And come on, and whoever the boomers like to follow, and they do their hail to their God, that whatever tells them what to do. And so you look at it and you're like, they are manipulating us based upon our generations and what we believe and kind of our value systems that we are in. And so there's the boomers, then there's Gen X. I'm probably missing a couple here. The millennials and the Gen Zs, and there's maybe Gen Y, I think it is. So like our sons are all in Gen Z, but our sons are about 9 and 10 years apart from our youngest one. And so I know Gen Z, our older sons think way different than our son, who's at the bottom of Gen Z. He's like a senior in high school, and there's like a 9 and 10 year difference between them. And they think quite differently on many things. And so even people within their own generational, the boomers and the Gen X's, they think different. Like you and I are in Gen X, but what did you say? We're at the very start of Gen X?
We're the old Gen Xers.
We're just outside of the boomers,
right.
And then we started that. And so each one of them, they know how to manipulate each generational thing. They probably study this. And so this is probably about Wyckoff. I would love, actually, I'm going to go research him and actually study what he wrote about, because I think that's fascinating. And to understand that, and to know that if you are part of this, you are part of this manipulation. And so as long as you know that, you either don't put yourself too much at risk, make yourself too vulnerable, or to understand how to kind of play along with it as well, so that you can, I guess, benefit. And the one thing that the gentleman did say, the same person or groups or entities that are fanboying it on the way up, let's say Bitcoin, are the same ones that you hear poo-poo it on the way down. And so who was that? Who were that? And that's something to now start listening to with the keen eye. Who are the ones that are fanboys of anything, whether it's Bitcoin, it's Doge, it's Safe Moon, or whatever? And then and they are the same groups that are shaming it on the way down.
Well, there can also be those people could be also, as I think Lenin said, useful idiots. I mean, they could be not knowingly helping things along, and then
right.
And
then it's done in a very genuine heart when they do it, because they don't realize they're manipulated.
It include us in some fashion, if you really think about it.
Absolutely. That's why I'm saying, if you don't pay attention to this, then you could be. And so it is something that what's the big thing? What's the big motto in crypto? Trust no one, verify everything.
Trust but verify, or verify but trust something. Trust but verify.
No, there's no trust. It's no trust, verify.
Verify.
Yeah.
something like that. One of those two. We'll get it right one of these days.
Yeah.
There's so many things that have been, that
sometimes when you start following somebody, like, hail to this person, maybe you need to step back and say, listen, are they pushing this up for a certain reason? There's a lot of people who are really big on social media. I mean, we're not, but I'm saying there's some people.
What do you mean we're not?
you and I follow a lot of people on social media that are quite huge in it. And then when all of a sudden you start seeing them, and I've noticed this, and I've been in a keen eye, when they really push a certain currency, or not currency, a certain coin or a token to buy, and you have to start to wonder, is this just because they have a big following and it's because they want it to rise up?
It could be. It could be. And, it's, I'm a big believer in zigging while other people are zagging. I think a lot of times when you feel like everything is going down, in the current, when you get in the river, everybody's going the same way. At some point in time, when you feel like everybody's, yay, Bitcoin. It's
right. And you could say you and I, because our show's called Bitcoin Say What, and we talk about Bitcoin, are we trying to, and, because who's to say in 10 years that we don't get a bigger following?
Absolutely.
And so you could say the same thing about us, but we truly, we do own other altcoins as well, not a lot of them and a lot of variety of them, but we're only hot on Bitcoin because we believe it's going to be a store of value for the whole world.
Well,
and other ecosystems like Ethereum are going to exist as well. And so what goes with Bitcoin goes with the other ones. And so
I guess how I look at that is, I say, as a general thesis, I mean, I think if Bitcoin doesn't happen, everything else kind of falls. Maybe it doesn't, but that's my personality. I'm a kind of all or nothing person. Sometimes, trying to find, the challenge for a person like me with my personality is trying to find the gray and the black and white. You know what I mean? So I think that's why a lot of times, I'll go out and look for contrarian views because something may not add up. So I have to go and look for something that maybe not passing the smell test as of all of a sudden. If I'm becoming such a big fanboy, why am I, I want to know, I guess how I look at it is I want to have some sort of conviction when I look somebody in the eye and say, this is my thought process. And it's clearly stated and it's very well thought out.
Right. So, all right. Well, we are at 42 minutes. We appreciate everybody who's been on the stream with us. We appreciate that. And we will be back tomorrow. And anything you want to say before we head on out?
No. Hey, everybody. Thank you for joining us. And I
thought you were. I was trying to get it to go right at the time.
She's trying to shut me up.
No, I thought you were going to say thank you for joining us at.
Look at it. She trapped me in this nice living room here. I'm trapped here. No, just, hey, everybody have a great day. Thanks again for joining us and taking your time. We know it's early in the morning. You got a place to do. Please like, comment, subscribe. Come visit us at.
Oh, I'm sorry.
Bitcoin Say What?
Boom.
Bye, guys. Thank you.